As we all know, Bitcoin went a little nuts last week, so I think the question on all our minds currently is, will this pump continue? So I want to take a look at Bitcoin on a few different time frames, look at some fib levels, indicators, and so on, just to see if there's any key levels that should be on our radar and that sort of thing for now. With that, let's start by looking at the weekly Bitcoin chart, as I always do, just to get an overall view of the market and how the health of the market is. And right now, as it looks, I know I've been talking about this in my last few streams, you guys, but I've just marked out every time that our weekly candles start getting closes above the 618. And that's basically the signal that totally changed my opinion on this market cycle. I thought it was going to be a fairly rangy year. I was honestly under the impression this would be our top out and we would just do something like this maybe the rest of the year and then next year have an explosive year. For me, this changed everything. And I mean, obviously, nothing has to repeat itself. And if you guys were in my last few streams or even watch them later, you know where I'm going with this. But the last few times, well, the last 5 times, I think it is, whenever we got a weekly close above that 618 rejection fib, it was just straight parabola from there pretty much. I mean, you can see this happen last market cycle. I remember that happening very clearly. Wasn't around for this one, but same thing after we got that weekly close above that level. See, we saw that initial rejection once again, as we usually do. But after that, you get the weekly close above. We even came back, retested it perfectly, and then just absolutely moonshift from there. And even back here, just this very little consolidation, you can see that we end up getting that weekly close above 618, boom, straight to the upside. And right at Bitcoin's initial history, basically. Obviously, there was the initial pump when trading first started and that sort of thing. Came back down, corrected, consolidated a little bit. We get that weekly close above that level. Yeah, we screw around for about a month or so, but again, just straight to the upside from there. That's a very nice buy signal in previous market cycles, or just not even necessarily entire cycles like something like this, just macro consolidation levels, looking at big weekly volatile ranges like that. And you can just see what happens when we get the weekly close above that. So yes, there is some things that we got to be cautious of. That's just kind of interesting signal. And I was talking about that for a long time ago. A lot of you guys will remember that when we were down trading at these levels, I was saying that I thought we were on our way towards the 618, which was around 48 to 50,000 US dollars. And we did get that initial reaction, but I was also quite clear that once we get that weekly close above that level, then I no longer necessarily believe we need to see a deep correction at that point. Yeah, it could absolutely come. Who knows what's going to happen in the economy, in the world with war. You know, there's so many things that could happen that could totally shift my opinion here. But as it stands right now, according to the chart, we have that beautiful signal. And you guys, today we actually have this next weekly candle closing. And I mean, something interesting just about this little rally, and just going back to last week's little bit of structure lesson. I just want to talk about how just as we're trending to the upside here on this rally, we set this high. We actually set a higher high, which confirms a higher low. And now if we get this close above here, that's actually now another higher high, which would bring, in my opinion, that brings our lower, or our higher low rather, up to this level. So just as we're going with our market structure here, you can see that we're able to just tighten up our invalidation levels as we go. And yes, obviously that's still a massive range. I mean, from where the top of this weekly candle currently, let's even call it 65,000, 64, 65, whatever. And the invalidation would be down below 50K basically. Yes, that's a big move to the downside. But as far as a large time frame chart like this on a weekly time frame, that just looks like any other market structure chart out there, you know, whether it's a 5 minute, a 1 minute, an hour, a 4 hour, whatever. Basically, charts tend to do the same things. And that's just what I would be looking at as far as staircasing higher. You know, we have this high, higher high, higher low, confirmed higher low, because we have the high and we have confirmed an uptrend by setting a higher high. So that's how I'm looking at the structure there. One thing to be a little bit cautious of is, you guys know, and a lot of you guys have been taking notes on it, and I'm pumped to see that a lot of you guys like my Stuber fib pocket, as I call it, the 786 to 886. I've never done any back testing on a weekly chart. I have no idea if it's going to be relevant testing into these fib levels on a weekly chart like this. Like I said, I've mostly just paid attention to the 618 when looking at these macro time frames. So yeah, ideally on a shorter time frame, I would be very much so considering taking a short at this. But being there's so much momentum on a weekly time frame like this, and we are still setting those higher lows, I just don't really want to bet against this trend. As well, as well as being in that potential resistance pocket, another thing we got to consider, I'm just going to make it red just so it's easier to consider resistance there. We also have this horizontal red line up here at the all-time highs. Something to watch for there would be, absolutely, we may get some sort of a double top at this level. The market is getting pretty euphoric. And even myself, you guys, like I'm more bullish than, as we were trading up towards this 48K, I was starting to be very cautious at those levels. And I was quite vocal about that. And this is just kind of the same thing that, hey, we are in fact coming up to resistance. I don't necessarily think we are going to see a harsh rejection at these levels, but it's just important to be aware of these levels. So the fact that we are, perfectly filled to the 886 fib there, and then all-time highs just above that. Specifically, if we get some kind of a swing fail, if we just get a wick above those all-time highs, but then we end up seeing a rejection candle next, that sort of a thing, that's where I'm going to start to consider, hey, maybe we are actually going to see a deeper correction. And even if that is just to the confirmed higher low at that point, right? Everyone would think that that's the end of the market cycle, or we're going to see a massive correction, but we may just be, in fact, testing just higher structure at that point. We're going to have to see how it plays out, obviously. What I really want to see, and, again, just giving an example ahead of time of how that, staircasing market structure would work. Like technically, if we get a weekly candle close above this level, yes, it's a close above this level, but you have to consider that invalidation, what's the lowest point between those 2 points? Way down here. Obviously, on a larger time frame like this, we're going to consider that a little bit ridiculous. But as far as a typical range on a shorter time frame and that sort of thing, how I'd be looking at invalidation of a swing like that, it would in fact be that far. However, where you can really start to take advantage of understanding market structure and just being able to keep a nice tight invalidation level, let's say we do close candle bodies above this level, so we did in fact bring our higher low up to this level technically. But then we end up setting another higher high, right? So we have this higher high and a new higher high from that level. Then our invalidation point is the low between those points. And that's where we can really start to snug up. We have a confirmed higher low in that case. This is all theoretical at this point, obviously. But that's the kind of thing where, and I know even when the market was going absolutely nuts on Monday, Tuesday, Wednesday there, a lot of people, and I totally understand, and it's a very healthy way of looking at things, is not wanting to FOMO into a massive rally that was underway. However, if you actually followed the structure of the chart like that, and having proper invalidation levels, waiting for higher highs before confirming your higher lows and that sort of thing, the trend carried out beautifully for 3 full days. So I want to see something like that on a larger time frame. Let's say we, like I said, we get our close above our all-time highs, and then even set some sort of a doji or something like that, just some sort of a candle of indecision, and then blast off through that. That's where we can really tighten up our risk, just have a nice tight invalidation level of the current rally that's in play at that point, right? I hope that makes sense to you guys. Let me know if anything about that wasn't unclear. If it wasn't clear, I would suggest go back and watch my video from Thursday, the one that says the most traders make these mistakes. I kind of go over in a little more detail and actually showing how the entire rally did play out and showing how I was looking at market structure along the way. So there's a lot of value in that video. So check it out if you either missed it or you're not understanding what I'm talking about with this market structure. So, but yeah, so that's about where I am at on the weekly chart with fibs and structure, just to bring up some indicators. Another thing that's interesting is down here. Oh boy, I haven't refreshed with the new names on any indicators in quite a while, but this was the MDX ALGO 5 or the oscillator stack, whatever you want to call it. What we have down here, which is nice, is we still have this green money flow. And I've talked about this in some videos before, and it was one of the reasons why I called the bottom down here. A lot of you guys from this group will remember this was like January 2023, somewhere in there. Yeah, right in here as we got this, I was saying that, hey, we actually flipped this money cloud, actually flipped to green. And anytime we get those kind of a flip in this market, I mean, whether it's, here's kind of where it turned red, right? I mean, it absolutely called a beautiful dump to the downside there. It ended up flipping green here. I mean, called an absolutely beautiful rally. Look back here, same thing. When it flipped green here, absolutely beautiful rally. I think that money flow is often overlooked with these indicators. And it is one of my favorite things when using these oscillators and things is looking at the money flow, because at the end of the day, money is going to tell the story. If money is flowing into the market, whether, maybe leverage derivatives are holding the price down, whatever, start to get those divergences in spot versus derivative prices, see the money flow cloud that there's just, this cloud is just getting bigger, right? There's just so much money flowing into the market. And yeah, obviously with ETFs and that sort of thing, the market's, obviously going through a bit of euphoria and people are willing to throw money at the market. This indicator up here as well, we did have this bearish pivot here, but you can see that the bands just ended up, they're just expanding. We're no longer even at the top of the band. So yeah, next time we get a bearish pivot, gold diamond showing up on there, then maybe it's time to be a little bit cautious again. But yeah, I'm really liking what I see on the long term, you guys. Even if we end up struggling with all-time highs, get some sort of a rejection, and even for like, let's say even a month or two that we struggle at this level, I think that would be totally normal. But I don't think the market's in a bad place, and I think people are going to get very spooked if we start consolidating there. But the thing to watch for is, yeah, we're trading into resistance, but if we just start consolidating at resistance rather than seeing a rejection, I mean, then there just might be, we're just chewing through those orders, those sell orders. We're just tapping away at that resistance, and eventually we end up blasting through, right? Obviously going to have to wait and see how it plays out. But we had the same thing last market cycle, and I remember this very clearly, and I remember people getting bearish at this level because we were struggling at all-time highs. It looked like a double top, all that sort of thing. We just traded sideways again for about a month and then just absolutely exploded. So just something I wanted to bring up as far as the long-term trend goes there, you guys. Well, I'm going to zoom in a little bit. Let's hop over to the daily chart, see if we can find anything here. Oh, actually, one other thing I wanted to bring up. Never mind. I don't have it set up on this indicator on that chart. We'll take a look at the daily. I am just going to remove some drawings here. I mean, yeah, obvious uptrend. And see, this is one of those cases, you guys, just looking at market structure, right, on the daily chart here. A lot of people are going to consider this a higher low. I am not considering that a confirmed higher low. Yes, we had a little pause in the trend. And yes, the invalidation is quite a ways away, which is why I would never be trading with my high leverage on a daily chart, for example. But invalidation of this, in my opinion, is way down here. Because we had, here we had our high, we have a higher high, that brings up our higher low, have a higher high, higher low. So this is more so the level that I would start to get worried if we plunge through this and flip it into resistance or something like that. Even if we ended up closing below these levels, again, that's that kind of that 50K area I was talking about on the weekly chart. We got daily closes below that. That's where I would actually, in a typical setup on a shorter time frame, that's where I'd be starting to look for a bounce, get that break in structure, and then most likely get some sort of a reaction and some kind of a bounce. And that's where I can start looking for Fibonacci levels and that sort of thing, looking for a short if I want to try and short a reversal, right? Like I've made it pretty clear, I'm not interested in shorting this market all too much right now. I'm taking the odd scalp when a setup really slaps me in the face. But other than that, I'm not all too interested in it because I'm not interested in just swinging at a random top just because I feel like the market's overextended. I more so want that confirmation that there's a break in structure, and you're most likely going to get some sort of a reaction bounce out of it anyways, and that's where I'm more interested in shorting the retest kind of a thing. So as it stands right now, I think we still have a beautiful trend here. I just want to see a few indicators here. We do have this reversal warning at these levels, but this is one of those times where I'm seeing with the indicators that we just have the indicators pointing out a beautiful trend. And I love doing this for Confluence. A lot of you guys are well aware of this. When I bring up any indicator pretty much, I mostly use them to help me identify the trend. And with these reversal warnings, all these W's here, you can see that they're just setting a series of higher highs. High, higher, high, higher, high, higher, high. Higher, 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 higher. They're just obviously trending to the upside. As well, on top of that, we have this beautiful buy signal down here on the trend collection indicator, and it's just been holding that trend beautifully. Yeah, it had this little fake out, got back above it, and then just same thing, just carried on to the upside. So we have more support with that as well. So yeah, like I said, a pullback would be totally natural. And here, I can even bring up the monthly chart just because it looks so ridiculous how big that candle was. If what would be totally healthy, and pretty much every time frame chart does this. I know Kieran often in his streams talks about filling some of these candles, right? Like we just have this whole gap has not been tested. We just blasted straight through. So, I mean, to see the next candle kind of test back into here, yeah, we might test all the way back again, that whole right around that $50,000, maybe a little bit lower, but again, that price range or that price level kind of coming on our radar, right? That it would be totally natural to just pull back, test into that level. Everyone would be shitting their pants because they haven't seen Bitcoin go down in a little while, but it would just be a healthy retrace, just testing some lower levels, just retesting some levels, right? So if we do pull back, I mean, it's not necessarily in a bad place, and people are going to be very quick to flip their tune if that does happen. Yeah, exactly. Ludicrous candle. It's just ridiculous. I want to take a look at the 4-hour. 4-hour chart actually has a tighter invalidation as far as this rally goes. I would consider my higher low up around this level on the 4-hour, because once again, we had our high, our higher high, lowest point between the two down here. So that's what I'm looking at. As long as we're basically holding above this, that's around 56.2K. That's where the higher low is that I'd be watching on the 4-hour for now. See, I'm not considering this a lower or our higher low yet, just because we never did end up breaking above this high. If we end up breaking above this level, that's where I'm willing to move this yellow support line up like so. If we get something like this, right? Hopefully that makes sense. And that's a way that I never looked at market structure that way for probably the first couple years of trading. I'd never really heard many people explain it that way, but I think it's such an important basis, like just a very basic fundamental technical analysis, just understanding market structure and just updating invalidation levels too quickly can be a dangerous thing, because then you're looking at getting wicked out of a trade even though you were right. Your entry was good, but maybe your invalidation was just maybe looking at things a little different because of unconfirmed levels. And yeah, I understand that with high leverage and stuff like that. That's how you keep your stop losses tight. But unfortunately, sometimes those invalidation levels aren't exactly where you want them. And yeah, if it seems too far away, well, unfortunately, the market doesn't always give a shit about our feelings, right? It makes it very clear every single day it does not care about our feelings. You have not thought about it that way before. Yeah, like I said, don't feel bad about that by any means. And maybe it's just the way I'm looking at it now. I don't know, but I I had my YouTube playing in the background and there was just random videos playing, and some random guy broke it down that way, and it totally changed the way that I looked at market structure. And honestly, no idea who the guy was, have never seen his videos again. It was just totally a random one, and I was just like, well, no shit. I went back and started back testing. I was like, yeah, that seems to work out a lot more with invalidation. But as with any trading strategy, you guys, and any way that somebody else is looking at the market, and I gotta say this every single video, obviously not financial advice, do your own research. And with doing your own research, I mean, go back, do back testing. Because we could have the exact same charts, the exact same indicators, the same trend lines, absolutely everything the exact same, and I can almost guarantee you we're going to trade it completely different. So make sure you are looking at things. Don't just assume you understand what I'm talking about, or looking at things the way I'm trying to explain to you and just assume, yep, I'm going all in with way too much leverage on this because Stu said this is a good idea. Make sure you go back and figure out, basically go into every trade assuming you're going to lose that trade, just so that you're not so disappointed, and that you do keep risk appropriate and that sort of thing, right? Let's bring up some indicators on the 4 hour. Same thing. That was the daily before when we had the uptrending W's, correct? You can see basically same thing though, right? On the 4 hour, we just have W's trending to the upside, just a series of higher high W's. A way I like to use these indicators as well, like beyond just spotting the trend, I can also use that not only for when I'm looking for entries, right? Like some indicators, or sometimes some setups I use with this indicator, for example. One of my strategies I've come up with is looking for which way these W's are trending, and then if they are trending with the signal of the trend collection indicator, then basically, so hey, we're trending to the upside, I'm basically just trying to buy anytime we get along that buy signal, then basically, because the W's are still trending in my favor. Whereas if all of a sudden, let's just pretend, this is all theoretical, I took this entry, we had upwards trending W's, end up buying along the buy signal, get a beautiful play out of this. All of a sudden we see a lower high W come into play. I would be strongly considering downsizing my position drastically. Not saying it has to end up changing directions, but it's just one of those ways that I like to use the indicators for, again, just spotting the trend, or just when to be cautious. Hey, the indicators are saying that we may be reversing here, time to at least pay myself a little, right? Update stop losses, do whatever you have to do in that kind of a thing. But that's a way that I love using these indicators. Let's zoom in a little further, hop into the 1 hour chart, see what we see here. Let's just start with a naked chart here. Let me just take a look at this. So on the 1 hour, this is kind of messy. I was going to try and break down this market structure. Like, yes, we had, well, actually, yeah, here's a perfect example. As we're staircasing higher, here's our high, we set a higher high, here's our higher low. Did it ever get invalidated? Absolutely not. We break above this high, set our higher high. What's the lowest point between the two? Let me just get rid of that. At that point, I'm moving the higher low up to this level, right? Then we end up breaking another higher high. We can move our higher low up to this level. Here's where it gets a little bit messy. Had I tried entering after, let's say after setting another higher high here, higher low would have been technically up to this level here. I believe I pointed that out on the 5 minute, actually, the day that it happened. I know that's when the market kind of reversed after our massive rally and caught a lot of people off guard. But on the 1 hour, this is just a little bit messy because we have so much wicks going on, right? I personally, since we didn't get the close below this level, I'm not considering this 1 hour trend broken yet. I would actually still consider our higher low down here on the 1 hour. Until that breaks, I'm going to say the trend is still intact. Technically, yes, we did have this candle body that did close below this level, but it came after we got these messy wicks. So this whole thing's just a little bit messy, and I don't know if it makes a difference or not, to be honest. I've never back tested this exact situation, but it's just messy, so I don't really want to adjust what I already have here. You can't hear me? Oh, I guess that doesn't help. One sec here. Oh, perfect. Whew. So yeah, that's basically the higher low structure I'd be looking at the 1 hour yet. If we end up breaking above this level, that's when, like, until that breaks, this trend, basically we're in the same range, right? We're just range bound in here until we break that level. The unfortunate thing about a setup like this, since we did come so close to our previous higher low, we're not actually able to move that up very much at all if we do get a new break, right? We break, we set some sort of a higher high, and really the lowest point between the two is down here. So we're only really moving our higher low from this level up to this level, basically. So yeah, unfortunately, chart structure doesn't always give you those nice tight invalidations. And then that being said, maybe the breakout isn't worth playing, right? But that's where I kind of look for those ones I was telling you about where, hey, if we get a higher high, yeah, unfortunately, invalidation's still quite a ways. But what if we get another higher high really close to that and end up breaking that structure? Then all of a sudden we have a nice bumped up invalidation level, right? And that's where understanding this type of market structure can really go a long ways. And I'm not saying you should be FOMOing into rallies or anything. It's just a way that you can do it a little bit safer because you have a nice tight invalidation level. So you at least have a proper stop loss of some kind. Hopefully that makes sense. And I think that's something that, you know, a lot of traders don't understand as well as they think they do. I think that's one of the most key bits of analysis that I can give, honestly. Basic market structure, I think, is the most important thing looking at charts. Generally speaking, I look at a naked chart first. I point out to myself what levels I think are going to be important structure levels. If I see any important structure breaks, that's when I can start pulling up Fibonacci's, pulling up indicators, seeing if things are agreeing with me, not trying to use those things to tell me what I should be seeing, but using them to verify what I'm seeing, right? Nothing better than getting one of your favorite charts naked. Oh God, that's hot. Zooming into the 5 minute here. At the start of the video, I did have my my current position on here. Where was that fib? I had my Stuber fib pulled from right here to here. And my average entry is just between the 786 and 886. I only got my first two entries on this. I never hit my third entry because usually when I'm looking for these setups, I'm laddering in, so I only do like a sixth of a position, a third of a position, half of a position. So I'm splitting up my orders because I know a lot of you guys are probably thinking, what the hell is Stu doing? He's using super high leverage and it's volatile. His loss has got to be a ridiculous percentage. I'm actually significantly bringing my average entry down by laddering in heavier as I get towards my lower entries. So my average entry, if I am going to get stopped out just below my red fib, my average entry is actually somewhere between the 886 and the 1 fib. So just to clear something up there, or clear that up. And yeah, hit my first two take profits on this, and I let the other half of my position run. TP1, TP2. I have these other fibs here, just basically the 0.5, just because I think it's important to play the range until it breaks, because everybody obviously wants to hit a home run trade, but realistically the market's going to range trade a lot more than it's going to be trending. Like those rallies, I mean, you guys saw how much it caught everyone off guard when we get a rally for a few days. Nobody's ready for that because we just don't get that very often, right? Usually speaking, we're trading in ranges. So whenever I'm pulling Fibonacci's, whenever I'm entering trades, I'm always treating the first half as a range bound trade. So that's where I'm, taking a quarter my position, taking another quarter, and then letting half run, because hey, if this thing does take off and continue trending, we break out of this range and just absolutely moonship, then at least I still have some of my position in, which can, avoid me from just FOMOing in at a dumb time or whatever. Just yeah. So yeah, my first take profit is the 0.5, because I think the middle of a range typically is a place that gets reactions quite often. And then this 214, that probably seems like a totally random number. That's actually basically around, it obviously varies because the pull is slightly different, but that's basically the opposite 786. And you guys know, since I love entering at 786, I also like to take partial profits at a 786 if I'm the opposite way. So if I'm just looking for resistance in this range, I'm pulling from the top of my range, pulling down to where we bottomed out, the lowest point between those 2 points. And look at that 214 is just slightly front running the 786. So that's why I have that fib level as well. Just because it probably looks random to a lot of people. Stuber fib settings. What do you mean by settings? Just the numbers? You should just see the numbers here right now. 1, 886, 786, the 0.5, 0.214. And my stop loss is 115. That's just telling myself to leave some wiggle room for a stop, basically. The thing is, guys, though, I want to be clear about this, because I have seen some people using them slightly wrong, and quite often the 786, 886 Fibonacci levels do get nice reactions either way. But usually when I'm pulling them, there's a few different things I'm looking at as far as structure breaks and that kind of thing before I'm pulling them. So it's not just a random pivotal point or something like that. Just because I've seen some people say that they've lost trades with the super fib setups a couple times and stuff like that. And don't get me wrong, you absolutely will lose positions using this strategy as well, even when you're using them properly. But I've seen people posting them where I'm like, oh, that's weird, I wasn't able to pull one today, for example, because my rules are just a little different. So just understand that. But yes, generally speaking, 786, 886 are my levels of interest, basically. And even if it's not my ideal setup, so I don't take an entry on it, for example, I'm at least looking at taking profits if I'm in a trade going the opposite way and stuff like that. So just another way I like to manage my risk, remember to pay myself, that sort of thing. Wanted to take a look at Eng here. Actually, I was just marking out random structure levels that I deemed as important yesterday and this morning, basically. So right now with Eng, I'm looking at, actually, here's one of those perfect examples. I'm just going to remove the drawings. So after, we actually had this big little nuke down here. But so after we end up breaking above this range here, so this is the bullish signal that, hey, we've actually set a higher high at this point, right? Unfortunately, what's the lowest point between those 2 points is way down here. That's quite a significant invalidation level. After we got that weekly close above invalidation, that's damn near a 20% move to the downside. However, what we did get is we now set another higher high. So that's where we can at least bring our invalidation up to what's the lowest point between the high and the higher high. I'm treating my invalidation as this level. So if we break that level, then yeah, I'm going to be a little more cautious and potentially feel a little bearish on something like this. Eng in general has been doing absolutely beautifully, though. I know we've been talking about it pretty much every stream for the last month or two. Rocket Man. I don't know if Rocket Man's in here. I know he's the one who pointed it out the one time, and I know there was a few of us eyeing it up after that. But basically, we had a beautiful. Let me just find where I had this trend line. I think it was basically right here. Yeah, had this downward sloping trend line for that goes back basically a year and a half. So a very significant trend line, very accurate touch points on a daily chart like this. At least 3 touch points, nice and spaced out, breakout, end up coming back and retesting this line, flipping it from resistance to support so many times. And on top of that, we also ended up breaking some structure. We ended up getting a Fibonacci pull from this market cycle low to where we ended up topping out on that breakout. We came back down and tested my 786 absolutely perfectly, and that is now up, what is it, since we've been talking about it there, over 100%, 114% currently. Was, yeah, right around 110, 115%, somewhere in there since we found that. So yeah, that was basically back here, I think, when we were eyeing it up, right when we started breaking out of this trend line, basically. There was a few of us that were basically watching the retest of this line. So that played out absolutely beautifully there. Pretty pumped on Eng for that. Here's one of those examples, you guys. It feels like it was volatile, like I was just talking about that big 20% correction basically we just had. On a shorter time frame, this would look totally normal to get a big wick. Like if this was a 5-minute candle here, and then the next 5-minute candle, nuked in here, I'm going to say, and retested the entire candle and gets bought right back up. Nobody would ever second guess that on a 5-minute chart, a 1-minute chart, a 15-minute chart, anything like that. But we see that on these longer time frames, like the daily chart, the monthly chart, and stuff like this. This just goes back to when I was talking about the monthly chart with Bitcoin. We do see that happen quite often. And even though it nuked 18% over the course of a few minutes, basically, it was totally healthy, in my opinion, because it was just retesting into this candle, right? As far as what some indicators are saying, the core trend showing beautiful support. Not only that, but again, just noticing which way. Here, I'm going to delete my drawings. Using these indicators to just kind of point out which way something is trending, right? Obviously, we have support with this indicator here, but what actually interests me about this is this support trend started higher than this one did. So technically, this indicator is showing that, hey, every time it's finding support, it's actually finding support a little bit higher. So again, just helping me to spot the trend using the indicator like that. Same thing with these indicators. We got these W's started trending to the upside. Like I was just talking about, you guys, with one of my strategies with these indicators. W's trending to the upside, come back and buy along that buy. We have that buy signal. We come back to that level. Absolutely beautiful. On top of that, these buy signals are trending to the upside. This buy, we got a higher buy, right? So again, they're just showing that these indicators are trending to the upside, and they're helping us identify that. Yeah, good call there. Pull the fibs on the pair you're trading. I mean, some people like looking at trading pairs on different exchanges because better volume, stuff like that. I personally like to trade whatever chart I'm actually trading. Like if I'm trading on BingX, I'm using the BingX Bitcoin pair or whatever pair. If I'm trading on MEXC, I'm using the MEXC chart. If I'm on Bybit, I'm using the Bybit chart. Yeah, some of them are a little more reliable, I guess, in like trading steadily and just, avoiding wicks and stuff like that. But really, if there's crazy wicks happening or a lack of crazy wicks or whatever, whatever my invalidation levels are when I'm entering trades and that sort of thing, it's always just based on whatever pair I'm actually trading. Otherwise, there might be a slight difference where, let's say, my stop loss got hit and it shouldn't, but I was looking at a chart where the price ended up going down $20 lower or higher or whatever, right? Yeah, as far as this little interesting. Yeah, I want to say that we have this little trend going for now. We have high, higher, high. Could have invalidation kind of above this level here. But again, this is just getting a little micro analyzing because we are, we are still technically trading in this bigger range that I was talking about earlier. Realistically, more something like this. So as we start pulling more fibs, like, yeah, we're obviously, a little higher risk that we're trying to microanalyze thing and catch little ranges inside of other little ranges and that sort of thing. But yeah, as it stands, just for this little rally that we're getting off my last super pull there, yeah, I would say, since we broke this level here, I'm hoping to see the price stay above this support, the support of that range, basically. If it drops down, the thing is, yeah, there's absolutely more potential support a little bit lower, just as far as this immediate little swing goes. That's basically what I'm watching. Kind of funny where we're getting rejected. Like, obviously, I can just tell you exactly which fibs it's going to be at. Right into that 786, 886 pocket. The thing is, there's not necessarily a bearish break in structure before pulling this. That's where, I was willing to take profits at this level on my long position, but I wasn't actually willing to take a stab at a short currently. Like I said, not interested in shorting, but still an important level, obviously, that there's quite often some sort of a reaction at those fibs. So that's why I like to make sure that I have this 214 fib that I take profits at. I actually front run that a little bit as well, just to give myself a little less stress. Which low wick would I mark for this range? Let's just zoom. I guess, well, our current high, here, I'll show you how I'm going to find this. Our current high of this range, because obviously we have not been any higher, would be this. Actually, something that's interesting looking at this right now is technically it might actually be bearish yet. So I did point this out. This is what I was talking about earlier. On the 5 minute, I pointed out that we had actually lost this structure, and that was the first time we lost high or low structure on even the 5 minute chart in 3 full days. And at that point, I mean, that's our high, and technically we broke the uptrend. And the fact that we also have not broke below this low here, we haven't actually set a lower low there yet. This will be interesting. If we pull up a Stuber fib, see, this would have actually been a valid short setup. I never did take it. I'm kind of kicking myself for not taking the hedge at it when it first happened. Usually when I pull these, I like to go for the first attempt, just because you often get that initial reaction, and if you keep testing those levels, then sometimes they get weaker and break. But that first test was absolutely beautiful there. Like, again, I missed that, but that would have been an ideal setup there. So looking for any sorts of fibs, like I'm actually leaning towards having the bearish ones open right now. I'm going to make a little resistance box here, a little boxy box. And what else can we find here? Well, like I was talking about on the 1 hour chart, it actually looks different. Oh, here we are. So it kind of depends what time frame you're actually playing, right? I mean, just how we got that nice reaction to the upside, yeah, it's important to recognize that, hey, we are technically up close to those resistance fibs right now. But again, on the 1 hour, I'd probably actually be pulling my fibs from down here, looking for support fibs. do something like so. I'm gonna make this red for resistance. I will make this green for support. And that's almost how I'm looking at this range right now. It's because if we pull from the swing low on the 1 hour, then we have something like that. So we have my 786, 886. We have the support of the range. And then, like I said, from the opposing side, if we're going to be more leaning towards the bearish scenario here, more looking at the 786, 886 right up here. And then we have the high of the range in red here. Like I said, it got a little messy here. When we topped out on that rally, it got a little messy. It is a little bit hard to decide for myself personally at this point, but those are the levels I'd be interested in watching right now. Let's see if I can find anything else here. Zoom back into the 5 minute, as we all know and love. Yeah, as far as the current range, like the main range I'm looking at, it would be something like this. Basically from 58.5 all the way up to 64.4. It's quite a big range, but yeah, that's an hourly range. The 5 minute, like I said, more so looking at something like this for now. On the 1 hour, sure. Like why I picked this one down here, you're talking? So that's basically, like I said, this one gets a little bit messy, and I have mixed feelings about this. I want to be very clear about that. Sometimes it's very easy to identify a range, and sometimes it's like you could very easily overlook something, and I feel like this is one of those times. So this is what I'm watching, but this one is a little messy. But here we would have had our high. We did technically set a higher high here, which would have brought our higher low up to this level. We did technically break this higher high, setting another one, which should in fact bring the higher low up to this level. But this is where it gets messy because, you know, we did technically lose that structure, but it was just a big candle wick on the 1 hour, right? The fact that it was just a wick makes me think that, hey, if anything, it's more of a swing fail that we lost that higher low. So it is actually showing that we still had some buying support there. We did have these candles, just these two right here, that did actually close below this level. However, again, just the fact that there's wicks in between the two, it's just messy all in all. So the only I'm just going from the green one down here just because it's a little more clean of a pivotal point like that. Again, this one, I have mixed feelings about this one. I do want to be clear about that one, but basically the structure on the 5 minute makes me want to favor this red box up here. However, I just think with momentum being so strong for the bulls and being so bullish on the larger time frames, I'm just giving a little more wiggle room to, you know, things are kind of unclear in this whole area. So I'm kind of just favoring the bullish scenario. Yeah, the more conservative one, or honestly understand that it's just higher risk. And if you're looking at playing something based off a range like this, if you're unsure like that, either wait it out and wait until something is more clear, or just consider downsizing your position size just to moderate your risk a little bit, right? Also, I don't typically look at the 1 hour all that much. But yeah, as it stands, I would say something like that. It would be a lot easier, actually, just to explain something real quick here. It would have been so much easier to outline had we ended up setting another lower low. Like, if we had, because we don't actually have a lower low after breaking that higher low. Sorry, I'm getting tongue tied here. Let me go back. We broke this higher low structure, but after that, we never did break a lower low structure, right? Because even if I bring this green line up to here, where we bottomed out after that reversal, we never did break that level. So if we did actually break that level, and let's say at that point, let's just say this bounce would have came down a little bit lower, so we had a low and a lower low, then we would have had a very clear lower high on the trend. And then this would have been our bullish signal that, hey, we actually broke that downtrend already. So now it's time to start looking for pullbacks, Fibonacci's, indicator, confluence, whatever for the bullish side. But just the fact that we never got that lower low, it just makes structure a little bit messy and unclear in this area. Just one of those times where you don't always have your ideal setup, but sometimes when you do get those, when you start to see, lower low, lower low, all of a sudden you can really tighten up those invalidation levels or notice reversals and that sort of thing, because you actually have that structure to work off of. Whereas right here, there's basically no structure in here other than the fact that we ended up losing that higher low structure, which again, I went over that in my last stream. But basically, this entire rally on the 5 minute, we never did end up breaking structure, right? Actually, right here was the only place that we technically set a little high and higher high. But after that, anytime we had high, higher high, boom, we can move up to a higher low. Or rather, I guess we would have topped out here. So that higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. Well, I mean, I could keep doing this, but you get the point. Higher high, higher low basically stays the same there. Then another higher high, higher low. See, that's one of those times, right? We got our higher high here. High, higher high. Our higher low is way down here, but then we set another higher high here, and that's where we can really bump up our invalidation, right? And look at that, it was still respected, right? Higher high, higher low, respected again, never quite hit that. Higher high, higher low, and yeah, like I said, this was the first time that we lost that structure in 3 days. Again, if I went through that quickly or it sounded like gibberish, watch my previous video here, the one most traders make these mistakes. I go into it in a lot more detail there, so check it out. Anyways, guys, I'm actually tempted to get back outside and start shoveling the driveway again because it's still coming down out there, and we've been at about an hour here. Is there any last minute questions, concerns, requests, anything? Everything I went over through this making sense? I know it's kind of a lot to take in because a lot of people do have that basic misunderstanding of market structure, and I think like really wrapping your head around that, yeah, it takes some time, and sometimes I can just fire it off and you might not be keeping up to what I'm saying or whatever because it's just second nature and I forget that not everybody knows those kinds of things. So by all means, let me know if you're struggling with it or whatever. But I think that's one of the most important things is just understanding market structure properly. I've actually seen, I believe it was Coach Jan, I believe I was watching one time, and he was talking about that type of structure as well. So I dream in fibs. Yeah. Oh yeah, it's still snowing here a lot. We're supposed to get like, oh fuck, another half a foot or a foot or something today, I think. But I like it. I like being outside. I'm gonna bundle up in my snowboard gear, go do a little shoveling, work off some of that pizza I ate last night, come back in, play some video games, look at some charts, that sort of thing. So I was considering going kiting, Sean, but I was just thinking it might be hard to get back to the vehicles, is all. Anyways, guys, I am going to wrap up. I'll still be here for a minute after I wrap up. Just wanted to wrap up the recording here. But so that being said, anyways, legends, I think that's about all I really wanted to go over today. Hopefully you found this stream useful. If you appreciated my insights, it would do me a huge favor if you go to my YouTube channel and like this video once it's uploaded in a little bit here, probably in about a couple of hours. For those of you who are watching this stream on my YouTube channel a little bit later, if you're interested in some of my favorite indicators, plus access to the VIP Discord with live streams such as these put on by not only myself, but also a handful of other very knowledgeable traders in the group, as well as no KYC exchange to get your DGen on and that sort of thing. I have a couple links in the description down below, or discounts and so on. And with that, I'm out. Stay safe, my friends. Peace.